Hello, Mrs. Kenko and everyone. Today I'll talk to you about the accounting-related scandal for Pan West Petroleum Limited, now known as Obsidian Energy Limited. The scandal involved the overstatement of the company's profits and the understatement of its expenses because of misclassification. In this video, I will talk in detail about the whole accounting scandal for what happened, who committed, who was hurt, when and where it happened, final outcomes of the trial, list and explain the accounting standards the company ignored, and I will give some recommendations to the company going forward without this accounting scandal happening again. Let's first go deep into this event. What happened? This accounting scandal misclassification of certain operating expenses as capital expenditures lead to the overstatement of the company's profits and the overstatement of its expenses. A restatement of this company's financial statements, legal activities by security regulators, and significant financial and reputational consequences for the company. Who committed? The scandal came to light in 2014. Several top executives, including the Chief Financial Officer, Joseph Camerata, Chief Operating Officer, Eric Cohen, and Chief Accounting Officer, David Pontrieri, were implicated in the accounting irregularities. Who was hurt? The consequences of this accounting scandal were far-reaching. The internal stakeholders and employees were hurt by this scandal, and the overstatement of profit and understatement of expenses lead to a decline in the company's share price and credit ratings. Moreover, the scandal damaged the external stakeholders who are the company's reputation and credibility with creditors, investors, and analysts. When and where it happened? The accounting scandal took place over several years from 2010 to 2014, and the company is based in Calgary, Alberta, Canada. Final outcomes of the trial. In 2018, the company agreed to pay an 8.5 million Canadian dollars penalty to settle charges brought by the Alberta Security Commission related to the accounting scandal. Additionally, the company entered into a deferred prosecution agreement with the U.S. Securities and Exchange Commission, under which it agreed to pay a penalty of $8.2 million and implement certain remedial measures to address the accounting scandal. Also, the top executive implicated in the scandal left the company, and the company underwent a significant restructuring to address the accounting scandal and refocus its business strategy. Next, let's move on to see the relation to our accounting course. In our previous course, we learned that the company needs to follow the generally accepted accounting principles, which is GAAP. So through my research and understanding, I find that Pan West Petroleum Limited ignored the course principle, objectivity principle, and the principle of conservatism in the GAAP. Put accounting scandal assignment of some items which should be classified in the expenses on the income statement into the assets on the balance sheets. For course principle, the accounting was unfair and unreasonable, and the results overstart the affairs of this company. It changed the historical cost paid from the original values, which ignored the objectivity principle. The company also made the accounting not recorded on objective evidence, so that they made the mistakes on the principle of conservatism, that different people arrived at the different values for the transaction, looking at the evidence that the accounting was unfair and unreasonable, and the result overstart the affair of this company. Finally, here are some suggestions for me to an auditor for going forward with this company so the scandal does not happen again. Segregation of duties. The company should implement a system of checks and balance to ensure that no single individual has control over a transaction to help prevent fraudulent activities. For example, the person responsibility for approve a transaction should not be the same person who records it in the books or as custodian of the assets. Review of accounting policies and procedures. The company should review its accounting policies and procedures to ensure they are up to date and complete with GAAP. Independent Audit Committee. The company should establish an independent audit committee to oversee the company's financial reporting and internal controls. The audit committee should be composed of independent directors with relevant financial expertise. Internal auditing. The company should implement an internal auditing function to periodically review and assess the effectiveness of its internal controls. Regular financial reporting. The company should provide regular financial reports to senior management and the audit committee to ensure that any accounting irregularities are detected in a timely manner. This scandal serves as a stark reminder of the importance of proper accounting practice and the need for companies to have robust internal controls to prevent such accounting irregularities from happening in the future. This is my reference. Thank you.